Hi there, welcome to the week ahead with Pivot Trader. Today I'm going to have a look at the US bonds because they had a bit of a sell-off last week, and I think they are the thing to watch, especially if you're long things like gold. And also I'll have a look at the equities after the sort of sharp sell-off and bounce to have a look at whether this bounce will continue or whether we should still be a little bit nervous. And then I'll have a look at oil and maybe finish off with gold if we've got time. So starting off with this US bond yield chart, and just to start off, to make sure you understand, with this chart, the yield is going down, which means the price is going up, and here yield going up, which means the price is going down. So it's sort of a bit of an opposite chart to what you're used to, but I just like looking at the chart of yields when I'm looking at the bonds. Looking at this chart over the last few years, we've got the US bonds falling from around 3% in late 2019, and boy, look at that drop into the COVID crash, going to nearly zero for the US 10-year bond yield, and this is the 10-year bonds. And then we've had, a big rise, going from around that 0.3 level up to nearly 1.8. But the story of the last few months has been this fall in yields, despite the fact we've had, rising inflation numbers, which really have been huge. But everyone says they're only going to last for a short amount of time, apparently, although I'm quite skeptical. So the big question here is, are we going to see the continuation of this longer-term downtrend? And remember, the fall in yields has been going on for decades. Or is this just the first sort of move higher and a bit of a correction, and it's starting to turn up? And we're getting that first signs now of yields starting to rise again. And for the moment, this is my expectation, is that we are going to see a continued rise in yields. And I just want to quickly explain why, just looking at the charts. So just having a look at that whole wave lower in yields over 2019 and looking at it based on, the point of control of the wave and the sort of buy and sell zones of that wave. The way I look at it is we've had the initial backup in yields, which is headed to the point of control there, around 1.79%. And then yields have dropped from there. So there's been buying support around that point of control. But it's headed back towards what is, the buy zone of that whole wave. And if things are going to turn back up, if yields are going to bounce from there, that is where you'd want to see, it's actually the selling pressure in the bonds, which means the sort of buying point for yields, where yields are going to turn back up. And, we have seen that so far, where there is selling pressure on the bonds at the point in yields where you'd expect it to be, around that 1.1, or this is 1.06% in those 10-year bonds. So for me, just looking at that, I'm wary that we are actually going to see some more upside, and especially if we bust out above that point of control, watch out, yields can really spike higher, and I think people would be surprised. If we just look back in the past, just very quickly, we had this back up in yields in late 2017, we had the initial wave higher, bit of a correction, which I'm guessing is back to the point of control, and then things started to turn up again. We got another wave higher in yields. And this is what I'm really sensing here, is we've had this correction, and now it's starting to sell off again. And if I do just look at the waves, you can see if we're looking back in the past, we had that sell-off in yields, we had the correction, which came back where? Back to the point of control of that initial wave, and then it shot to the upside again. And if we look here, got the initial wave higher in yields. We've had the correction back near that point of control, got very close, and here it is starting to turn up again. So it's a bit of a risky moment for these bonds. This next few weeks, it'll be interesting to see whether the current sell-off in bonds and the rise in yields is going to continue. So that's definitely something to keep your eye on, with yields moving from 1.3 to 1.45% last week. In the short term, you'd expect a bit of buying pressure and for the yields to drop a bit. But if it then, in the next few weeks turns back up and we start heading back above 1.5%, for example, and rising rapidly, watch out for this next leg higher in yields, which I think could be coming. And that will ultimately affect equities if it really does rise sharply. And gold could struggle in that environment. And, obviously the tech stocks as well might struggle a bit too. It's not panic stations yet, but it is just something that you need to have in the back of your mind, and it's one market that you want to check in with every now and again. And just quickly on equities, after we did see quite a sharp sell-off last week and bounce from support, it's worth having a think about whether this is now saying it's time to buy again. And I think it's just a little bit early to get too excited. And I just want to explain why very quickly. Obviously, the trends are up. So look, all long-term trends, obviously fabulous. There's no pullbacks at all. Bouncing off support where you'd expect it. And look, we did actually break through that 20-week moving average. But the support came in at that level, 1 to 2 standard deviations on the Bollinger Band, below that 20-week simple moving average. So that's where you often get buying support if the trend is going to continue. If we look back in the past, this rally that we got leading into the highs before COVID, you have the initial wave high when it's strong, holding above the 10-week moving average. Then you get a bit of a sell-off, but that moves into that buying pressure in that 1 to 2 standard deviations below, and that provided support from that point forward as the trend was weakening, and then finally when it breaks, and then it's all over. And that's why I have that grey line there, the 3 standard deviations below on that Bollinger Band. And if I get close below that, I'm usually a little bit scared. There could be a bit of a bigger move. So in this current situation, that wouldn't be until we got a weekly close, below there, and that's down below 7,000 in our market. That's another 5% fall or more that would need to happen. So from that point of view, big picture, all still looking fine. But just looking at the very short term, the thing I look at is that we do have a weekly sell pivot confirmed, which was actually only last week. So we got the high in the move there, the low of that candle here. And last week's, even though it sold off and closed strong, it still actually has caused a weekly sell pivot with a weekly close below the low of that highest price candle. So, this week we could see a weekly close above the high of that, and the chart's going to look absolutely brilliant. No doubt about it, because we've got the weekly trend is strong, and once you have, an initial scare, and then the buying comes in, and, you create the weekly buy pivot, closes above the 10-week exponential moving average, that's a buy signal. So then that could see things take off to the upside again. But I just need to see that weekly close above, because once you've got the weekly sell pivot, once you've got the start of the selling pressure, you often get the bounces up from that initial selling pressure. But if the selling is there, it'll turn back down. And that's how things move, isn't it? Where you've got this initial wave, gets people bearish, then you get the big spike, gets people scared, shakes them out, and then you get the next leg down. And you'll usually have a few waves like that before it will really tip over in a big way. So when it's early in the move, it takes time for it to really turn down. So it often has these big reactions as it's selling off. But the first signs is that weekly sell pivot in place. So that is there. We could start the week strong. And if the selling pressure comes in, we might turn down and finish the week weak. And then it could be on for young and old. You don't know. For me, I'm still bullish and everything looks fine on the monthlies, especially if you look at that. You can see no sign of a monthly sell pivot this month. So that all looks fine. Big picture looks brilliant. Bouncing off the 10-month exponential there within the long-term uptrend. So from that point of view, it needs to sell off a lot further. And in this next 4 days, it needs to sell off back below the low of last month's range to create the monthly sell pivot. So I guess we shall see what happens this week, shan't we? Whether that gets set off. But the weekly, just a little bit negative, even though we have strong upside momentum. I think the most bullish thing we have out there at the moment really is oil prices, which are starting to blast off through the highs of the move since the COVID crash. This is Brent crude oil prices over the last 5 years. You'll notice the big false break of the lows from 2016 there. That was a COVID crash and then recovery. And the resistance that we expect based on this huge wave down from 2019, 2020, was up in this sell zone area. I won't go and do it again, but it is up around here. And so we saw a bit of that selling pressure the last few months. But the uptrend is intact. So that is all still looking good. Nothing under threat there, and it's busting out above the highs. So it looks like the sellers are being overwhelmed, and this next leg should target that old high up around 85, 86 bucks in oil. That high is about around 87 bucks, and currently it's 78. So it will be interesting to see what happens in this next few weeks. Gas prices going nuts around the world, as you should know, and I've been telling you. And we're now busting out to new highs here for oil. So this could be sustained, this move. We'll be interested to see what happens if it can actually run and test the old high. Now that's obviously going to be a high risk point for another wave lower. But this trend up in oil prices looking very strong, and I have been telling you about things like Woodside, etc. in these updates for a while. Even though it's been weak on the merger with BHP, I still think that's not a bad bet over the next few years. So that's it for this week. I shall come back with more next week. Cheers.